Billionaires aren't just buying AI stocks. They're making massive, calculated bets on the semiconductor companies that build the engines of AI. Did you know the semiconductor industry is projected to reach over $1 trillion by 2030? This isn't just growth, it's a revolution, and a few key players are set to capture the lion's share. Today, I'm sharing the 10 semiconductor stocks positioned for explosive growth. So, let's dive in. First up, at number 10, we have NXP Semiconductors, NV, ticker NXPI. NXP is a global leader in high-performance mixed-signal solutions, particularly dominant in the automotive, industrial, and communication infrastructure markets. Their chips are crucial for everything from in-car entertainment to advanced driver assistance systems. What makes NXP so compelling right now? Just recently, they refinanced a massive $1.25 billion of their 2026 debt with a new $1.5 billion senior notes offering, pushing those liabilities out to 2028 to 2035. In Q2 2025, NXP delivered robust revenue of $2.93 billion, surpassing expectations across all its key end markets. NXP is also tackling supply chain resilience head-on, with a new $7.8 billion joint venture with Vanguard International Semiconductor Corp to build a 12-inch fab in Singapore. Analysts largely rate NXP a strong buy, with a median price target suggesting a healthy double-digit upside. Next, at number 9, let's look at Entegris, Inc., ticker ENTG. Entegris is a vital, yet often overlooked player in the semiconductor ecosystem. They provide materials and process solutions that are critical for manufacturing advanced chips, from purifying gases to specialized coatings. Citi recently maintained its buy rating on Entegris, citing its attractive valuation and expecting a much stronger 2026 driven by improved wafer starts. Entegris is making massive strategic investments, including a $700 million commitment to domestic R&D over the next few years, establishing a new technology center in Aurora, Illinois. While Q1 and Q2 2025 saw some mixed reactions due to year-over-year declines, the company's management remains optimistic for the second half of the year, anticipating stronger performance fueled by AI-enabled applications, advanced logic, and high-bandwidth memory growth. This is a foundational company providing mission-critical materials, making it a compelling, long-term play. Moving on to number 8, we have Teradyne, Inc., ticker TER. Teradyne is a leading supplier of automation equipment for test and industrial applications. In the semiconductor world, their test equipment is crucial for ensuring the quality and reliability of advanced chips, especially as complexity grows with AI and 5G. What's exciting about Teradyne? Their Universal Robots division recently partnered with Technicon to enhance pharmaceutical automation, showcasing the versatility of their robotics. But the real kicker for investors is their semiconductor test segment, which outperformed expectations in Q2 2025, largely driven by system-on-a-chip demand for AI applications. Teradyne is actively returning value to shareholders, repurchasing 1.5 million shares for $119 million in Q2 and expanding its buyback program to $1 billion by the end of 2026. Their Q3 guidance, while slightly below some estimates, still points to sequential growth, underscoring their resilience in a dynamic market. At number 7, let's talk about Qualcomm Incorporated, ticker QCOM. Qualcomm is a giant in wireless technology, known for its Snapdragon processors that power countless smartphones globally. But they are undergoing a massive transformation, strategically diversifying far beyond handsets into high-growth areas like automotive and IoT. This diversification strategy is paying off handsomely. Q3 2025 saw stellar earnings, with EPS and revenue both surpassing estimates, and a remarkable 10.4% year-over-year revenue increase. The automotive and IoT segments surged by 21% and 24% respectively, demonstrating the success of this pivot. Qualcomm is now aggressively positioning itself as a leader in AI at the edge, integrating advanced AI capabilities across PCS, automotive, and smart homes. Their Snapdragon X platform, designed for AI PCs, already has over 60 designs in production or development. Array recently upgraded Qualcomm to a buy rating with a $200 price target, citing substantial opportunities in AI. Now, at number 6, we have Analog Devices, ticker ADI. Analog Devices is a global leader in high-performance analog, mixed signal, and digital signal processing, or DSP, integrated circuits. Their chips convert real-world phenomena like sound, temperature, and pressure into digital signals, making them indispensable across virtually every electronic system. ADI has been on a tear, reporting its fiscal third quarter 2025 results significantly surpassing Wall Street expectations, marking the third consecutive quarter of growth. Revenue surged 25% year-over-year to $2.88 billion, driven by robust demand across all major segments: industrial, automotive, and communications. ADI projects an optimistic Q4 outlook, with revenue between $2.9 billion and $3.1 billion. Analysts are positive, with price targets reaching as high as $310, reflecting strong confidence. Financially, ADI is a powerhouse with a gross margin of 69.2% in Q3, up 270 basis points year-over-year. Coming in at number 5, we have Applied Materials, Incorporated, ticker AMAT. Applied Materials is the world's largest supplier of equipment, services, and software to the semiconductor industry. Essentially, if you're making a chip, you're likely using Applied Materials equipment. Their position is critical, as every technological advancement requires their cutting-edge tools. TD Cowen recently reiterated its buy rating with a $200 price objective, confident in Applied Materials' market share leadership. The company delivered strong performance in Q1 and Q2 FY 2025, with record revenues of $7.17 billion and $7.3 billion respectively, driven by increasing demand for advanced chip manufacturing equipment. A key differentiator is their SIM3 Magnum etch system, crucial for gate-all-around transistor fabrication, which achieved $1 billion in quarterly revenue in Q2. Gate-all-around transistors are projected to offer a 30% revenue expansion potential, putting Applied Materials at the forefront of next-generation chip technology. While their Q3 revenue guidance was a bit cautious due to capacity digestion in China and timing mismatches, Applied Materials' long-term growth is anchored in the AI computing revolution and advanced packaging. At number 4, we have Lam Research Corporation, ticker LRCX. Lam Research is a leading supplier of wafer fabrication equipment and services to the global semiconductor industry. They specialize in deposition, etch, and clean technologies, processes vital for building integrated circuits. Erste Group resumed coverage with a buy rating, highlighting Lam's strong ROE and operating margin compared to peers. Q3 and Q4 earnings reports showcased impressive growth and profitability, with Q4 revenues hitting $5.17 billion and adjusted EPS of 1.33, both surpassing expectations. Lam is strategically positioned to capitalize on secular growth trends in AI, 5G, and IoT, actively developing innovative solutions like the Acura etch system and Altus Halo deposition tool. However, it's worth noting that Morgan Stanley recently downgraded Lam Research Corporation, citing concerns about a slowdown in key growth drivers like China and NAND memory markets due to export restrictions. Despite these headwinds, the broader analyst community maintains a moderate buy consensus, with an average price target suggesting potential upside. Moving to number 3, we have Broadcom Inc., ticker AVGO. Broadcom is a diversified global semiconductor and infrastructure software company. Their products span a wide range, from data center networking chips to broadband communication solutions. Broadcom recently announced a collaboration with NVIDIA to bring the latest NVIDIA AI technology to VMware Cloud Foundation, empowering enterprises to scale next-generation AI models in private cloud environments. This expanded integration supports NVIDIA's Blackwell GPUs and networking, engineered for massive AI training and inference. Broadcom is set to report Q3 fiscal 2025 earnings, with high expectations for continued AI-driven growth. Their custom AI accelerators are increasingly favored by hyperscale customers like Alphabet and Meta for efficiency. In Q2 2025, AI revenue surged 46% year-over-year to $4.4 billion and is projected to hit $5.1 billion for Q3. Analysts are overwhelmingly bullish, with a strong buy consensus and some price targets reaching as high as $350 to $400, reflecting massive upside potential. At number 2, it's the undisputed foundry giant, Taiwan Semiconductor Manufacturing Company, ticker TSM. TSM is the world's largest dedicated independent semiconductor foundry, meaning they manufacture chips designed by other companies, including NVIDIA and Apple. Their advanced technology nodes, like 3 nanometers and 5 nanometers, are absolutely critical for the most sophisticated AI and high-performance computing applications. TSM reported a blockbuster Q2 2025, with net income surging 61% year-over-year and total revenue increasing by 38.65%, comfortably exceeding analyst expectations. This phenomenal growth is fueled by insatiable demand for AI and HPC. The 3-nanometer process alone contributed a staggering 24% of wafer revenue, demonstrating their technological leadership. TSM's market dominance is unparalleled, with a 70.2% share of the global foundry market in Q2 2025. They've raised their full-year 2025 revenue growth forecast to 30%, reflecting strong confidence in sustained AI demand. To support this, TSM plans substantial capital expenditures of $38 billion to $42 billion in 2025, focusing on advanced packaging and global factory expansion, including their cutting-edge 2-nanometer chips expected in 2025. And finally, at number 1, it's the undisputed king of AI, NVIDIA Corporation, ticker NVDA. NVIDIA has already cemented its status as the world's most valuable company, riding the AI boom to new, unimaginable heights. Yet, the growth story is far from over. Their GPUs are the fundamental building blocks for AI training and inference, powering everything from ChatGPT to autonomous vehicles. NVIDIA reported stellar Q2 fiscal year 2026 results with record revenue of $46.7 billion, a massive 56% year-over-year surge, comfortably surpassing expectations. Their data center segment, driven by the Blackwell platform, contributed $41.1 billion. Major hyperscalers like Meta and Google are reportedly increasing capital expenditures just to secure NVIDIA's advanced GPUs, underscoring their critical role in the burgeoning AI infrastructure market. Projected to reach $3 trillion to $4 trillion by 2030, NVIDIA is deeply involved in nearly every sovereign AI deal, projecting tens of gigawatts of enterprise and sovereign AI factory installations. With $60 billion authorized for buybacks and a projected R&D spend to surpass Intel's in 2026, NVIDIA is relentless in maintaining its technological edge. The market is betting big on NVIDIA's continued innovation and dominance in the AI revolution. Now, let's bring it all together and glance at the raw numbers. Starting with NVIDIA, with a market cap of $4.2 trillion, it absolutely dwarfs every other company here, a testament to its unparalleled position in AI. However, Taiwan's semiconductor manufacturing isn't far behind with a massive $1.2 trillion market cap, showcasing its critical role as the world's foundry. Broadcom also enters the trillion-dollar club at $1.4 trillion, powered by its dual strength in semiconductors and software. Contrast this with Entegris and Teradyne, both at a more modest $12 billion and $19 billion respectively, demonstrating that valuable opportunities exist across the market cap spectrum. When we look at revenue, NVIDIA leads with a staggering $130 billion, followed by TSM's $90 billion and Broadcom's $52 billion. These are the revenue powerhouses. In the mid-range, Qualcomm and Applied Materials bring in substantial figures at $39 billion and $27 billion, highlighting their significant market presence. Entegris and Teradyne, while smaller, still command $3 billion each, demonstrating focused, high-value operations. Now, let's talk about profitability through gross margin. Here, NVIDIA truly shines again with an exceptional 69.85% gross margin, showcasing the immense value and intellectual property embedded in its products. Teradyne is also incredibly strong at nearly 59%, and TSM at 57.27%, both indicative of highly efficient and specialized manufacturing processes. Broadcom is also robust at 61.72%. Lower on the scale, Entegris at 39.86% is respectable, but it shows how different business models impact profitability, providing materials versus designing cutting-edge chips. Finally, earning per share, TSM stands out with $8.78, closely followed by NXP and Applied Materials, both at $8.39. Qualcomm also delivers a strong $10.37, reflecting its core profitability. NVIDIA, at $3.51, might seem lower per share, but its astronomical valuation accounts for its future growth trajectory. It's interesting to note that while some companies like Nvidia are trading at higher price points, their EPS can still be moderate due to their immense market capitalization and growth expectations. So, these 10 semiconductor stocks are absolutely foundational to the future of technology and poised for significant growth. Which one of these powerful chip makers do you think holds the greatest potential for long-term investors, and why? Drop your thoughts and predictions in the comments section below. And here are 7 best AI stocks to buy, according to hedge funds. Click on this video here.